Hello, welcome to this video. We're going to cover in this video, I want to discuss a little bit about Forex trading, and what I have for you on the chart is I'm using our ultimate swing trading strategy. In this case for Forex, we can also use it on futures and stock as well. And I wanted to kind of have a quick discussion about going for fixed targets versus trailing, because we were just at the Forex Trading and Options Expo out in Las Vegas and talked to a lot of individual traders from a variety of different experiences, from beginner right through to advanced. And this comes up a lot because people talk a lot about they see moves, if you're familiar with some of the moves the last couple days. Not today as much, because today was definitely a consolidation day, but if you look where my arrow is, yesterday we had some huge moves in several of the pairs, the euro yen, the pound US. You can see this move from 135, 250 pips in a pretty short amount of time, and it was kind of beautiful, right? Because we were able to enter where we got in at the dash lines, and it didn't look like it was doing much for a while through half the session, and then all of a sudden, 70 pips, 140 pips, 210 pips. Now, if you were to trail and you didn't use fixed targets like we like to use, you're going to have to let this thing kind of fall back on you, and at some point, you're going to get out, and you're going to give back. You can give back potentially 30 pips, 50 pips, 100 pips, especially on some currency pairs like the pound yen. You can't run a stop on a trailing stop 20 pips. You'll never stay in a trade because noise on some of those kind of pairs is literally 30 to 50 pips sometimes. So this is an example where you're a lot better off going with the fixed targets. But what happens is people see charts like this one. They'll show you here in a moment, like the pound US dollar. This is on a 30-minute using our strategy. And you notice we got out yesterday pretty, I'll say, early in the session. I mean, this is a great move. It's up to 250 pips. But then people go, well, wait a minute. What about all of this that you missed out on? Now, me personally, I'm never going to be upset about catching a move like this in pretty much half a day. But, you see this additional gain, and everybody's like, well, after the fact, you could have had a lot more. And that's true. Whenever you trail, it becomes a very subjective type of approach. It is definitely more stressful. There's definitely a lot more educated guess going on. You can do trend lines. You can draw, from point to point. You can use our trend lines. I mean, there's a lot of ways you can trail. We have a strategy called a 3-bar stop. I mean, there's a lot of things you can do. But the bottom line, it becomes subjective. And yes, you may catch a move like this and pick up another 100, 120, 150 pips, and that's incredible. That's great. But the reality is most moves do not go to this extent. We're typically very happy to get to this 3x target. That's what we call this. And I'll tell you, the majority of the trades are not going to make it to that level. So if you have less than 50% of the trades making it to this level, just how good is trailing beyond that price point? Now, it's hard to explain that to people sometimes because they just can only see this move and feel that they missed out. Me, I see this, and I hope, as a successful trader, you're going to see this as a great opportunity, knowing that nobody's ever going to know to get out up here or to let these trades run. It looks easy in advance or when it's all over, but when this market looked like this and we had picked up this profit, do we have any idea at this point what was going to happen? No. I mean, there's just no way to know really that kind of move can happen. I mean, I'll switch over real quick and we'll look at an Aussie US dollar trade that we're in right now. And we're doing fine with this trade. We've hit objective number 1. We've hit objective number 2. Objective number 3 is up here. Okay, we're not there yet. We came fairly close, but we didn't quite get there. Maybe close enough even to book the profit any time. But the bottom line on that is same situation. After a pretty good move up, we're in a 24-hour consolidation. So I knew this was going to happen today. After what we saw yesterday and even the day before, I always expect to see a lot of chop and churn while we consolidate the move. And we saw that across the board today. It's one of the reasons swing trading is so sometimes favorable to day trading at times, because day trading you had to kind of put up with a lot of swings up and down, not a lot of clear movement. But the bottom line here is, yeah, I could choose to trail this, but you know what? When I hit this target here and I hit the third target, the odds are, most cases, the market is not going to go dramatically beyond that. So I think I can definitely see and support trailing, but I would tell most people, until you become an advanced trader, it is much smarter to go for a fixed target. It's psychologically a lot easier to know where you're going to get out, to take that profit, to book it, and to move on to the next trade. And don't get hung up on missing the full extent of the move, because none of us, no matter how long we've been trading, can ever claim that we pick up 80, 90, 95% of the ultimate move. I mean, unless you literally have the magical crystal ball, there's simply no way of knowing just how far a market can go. But we know historically these markets will not go much beyond the second target or the third. They just don't. The minority go beyond that. So that's it. Wanted to make that point today. Hope that makes some sense. This definitely would apply to stock and futures as well. And enjoy, and we'll be back with you shortly.